5:27 in the afternoon. We have another down market again today, probably about 150-point pull-in off of our recent highs, rallying coming into 2013 with a settlement on all the issues in the fiscal cliff that we've been addressing for a long time, and now we gave back about 150 points over the past couple of days. Probably for the longs, they feel that this is a good pull-in area, a good healthy pull-in for people to reposition themselves to the long side, and for the shorts, this is a little bit of a reprieve where they have been getting run over for the most part, especially the past couple of days. 500 points or so in January, and now we're at a place where the battle begins, and we're looking at a little bit of a debt ceiling issue coming up, some headwinds in the economy right now, and just a battle, a tug of war between the bulls and the bears right now on a short-term and a long-term basis. There are a lot of people out there that do think that the shorts will get run over, that the longs will win out, that there's a continuation of bull market out there. You take certain names we talk about and we'll address them afterwards, but even like the bigger blue chip names, the bigger Fords, Ford, I don't know, what is that, going from 12 to 1350, 10 to 1350. So you're telling me it's about a 35% rally. Recently in Ford, you have Citibank breaking out above all highs. You have Bank of America. I think that's a triple, right? That's 300% or 200%, I should say, just over the past 6 months. Home builders also coming back, and the names we all love to hate also continuing to scream out. What's weird out there is you have Apple with the market screaming out. You have Apple still at that same level, at 520 level. I guess we're waiting on Apple also for some of those seasonal numbers, any new advancements, any new products coming out. It's interesting because I'm starting to hear a little more about Apple TV sort of leaking out there, and we'll see how that project continues to play out. But for the most part, Apple, one of the laggards in this market, in this environment. If everything else is up, 5 or 10% over the past week, you have Apple that hasn't really moved from these levels. I did sell some of my Apple. I bought some Apple down near the $500 level, and then I sold it when it bounced up to that $585 level. And again, with the community's help, talking about some critical resistance points up there, and the high $580 price, and allow for me to sell my stock that I bought, and now I'm looking to potentially reposition. Remember also I sold those puts, I believe it was $470 puts, and I brought in a couple points profit on that also. Guys, for the education today, quick educational piece, I want to do two things. First, I want to answer a great question that came in from one of our members yesterday, and then I want to talk about Traders Poker, as you see in the middle of your screen. Let's start actually with Traders Poker, and then for the question that came in yesterday from one of our members, I will address that afterwards and want to maybe pop something up chart-wise. So just hopping into this Trader Poker. You know what? Let me get a. Here you go. Hopefully that's made your afternoon even better. Getting a little picture, a little webcam action, middle of the day with Dave Shine. So here we have Traders Poker in the middle of your screen is a topic that I like to talk about. And when we talk about Traders Poker, we talk about the poker game that goes on every time you step into the trading market. So when you talk about the poker game, what are we looking to do? We're looking to read our other players, right? Why is it any different in the stock market? On the poker table, when you have somebody next to you, you get dealt your cards, they get dealt their cards, and what you do is you end up starting to say, okay, I'm going to either bet, and I'm going to see their reaction. Maybe they'll fold, maybe they'll call, maybe they'll raise me, and I'm going to evaluate how I think that they're going to play that hand. And what I'm doing during that time period is I'm evaluating how quickly they call me, if they raise me, if they fold. Obviously, if they fold, they're out of the hand, and then I'm watching the whole table for it to go around. What I'm doing is I'm looking to anticipate what's going to happen next. As you guys know, when you take my course, and the course is starting again on Monday, actually, right? Monday? Course starts again Monday. As you know, in the course, we always talk about the phrase called the anticipation of the anticipation. So what I know I do in my head, I'm a decent poker player. You know, just a funny story is a couple of us here in Shine's Trading Room went down to Atlantic City last year around the holiday time, and we rented a poker table in the middle of the casino for just ourselves to play and compete against each other. And it was cool to see some combinations, some correlation between trading prowess that people have and poker success at the table. If I'm not mistaken, it was either 8Ball or Melnick who was the big winner. But I saw very similar comparisons in the market that I do to playing poker and what traders sort of skill level is like, and where people should be. And I do remember one of our close friends who came with us. He had a couple good hands where I should say, get lucky, and he got lucky plucking some really good cards and, you know, nailing something on the river for him to, I don't know, grab a full house or something like that. So he won a couple hands, and he won them medium-sized hands or smaller hands, and then when it got to the end, then he got into the poker game where there's actually a skill set, and there was a read that he needed to make, and he didn't read it right. He got taken down all his chips in 2 hands. So that's a big shout out to Jersey Al, if you're out there. Jersey Al, you know, just not as skilled in poker, and also, you know, at that point, relatively novice in the market. And, you know, so the same thing when it comes to the stock market, right? You're looking at this level 2. Some good comments coming in. So you're looking at level 2, and when you're looking at level 2, what are these guys doing? What are the bids and the offers mean? Where are the big buyers? Where are the big sellers? Where are the fakes out there? Where are the bluffers, as we call them? Everybody always asks me, yeah, but what happens if that guy leaves? You know, a guy could be real or he could be fake. You know, you could have put in a bid for 5,000 shares underneath where the market is, and now somebody says, wow, there's 5,000 shares over there. Does it actually mean anything? Probably not. What it does for me, when I look at the level 2, what I'm looking for is I'm looking for guys who are there. And remember, my most important thing is when I have an out, I want to be able to punch out my position and punch it out at a certain level and mathematically equate that level where I'm going to sell my position. The way I do that is when I have liquidity. So I know that if I see a bid somewhere, I'm not necessarily saying that he's a big buyer and he's going to push this stock up, unless I analyze that and I see that happening where he goes higher bid and higher bid and higher bid. But what I will do is I will use him as my out. I will use it as my stop. I will use it as a level of support. Remember, this is a game of buyers and sellers. So if you have a certain amount of buyers on the bid and you know you could get out and you know that's where the liquidity or the saturation and the buyers are coming in, that may be an area where I want to focus on using my stops, using my positions properly, and getting in there at the proper levels and really anticipating what we need to do. Anyway, getting back to the poker comparison. So once again, you guys watch World Series of Poker. How many of you guys watch World Series of Poker out there and you turn on ESPN? I know I watch World Series of Poker, and it's sort of weird because I don't know why it's interesting to watch other people's poker games and poker hands. It's almost crazy. But what I like to look, go ahead guys, you could type it in. April, you're too much. Can't stop watching it, and explain why. Explain why, Adam. Why? And it's good late night TV. Why is it? You know what I think it is, or at least for me, and you guys could type in what's intriguing about it. What I think it is for me, I think I get to learn perception and learn the anticipation skill more and more. Right, when you can see their hold cards. Yeah, now they started doing sometimes where you can't see their hold cards. You know, they probably have compliance in that business also. Like analyzing the way players think. Exactly, because you could see what they're holding. Exactly, Adam. And that's what I look for also, right? Because what does it do? It helps me with my anticipation. Okay? It helps me to predict and anticipate if the next player does something, how will I react to that next move? Okay, so when I'm sitting at a poker table, the guy next to me calls, the next guy calls, the third guy limps in, he raises up a little bit, and he raises, I don't know, $50. So what I'm saying to myself is, by the time it gets to the first player, maybe I know I have a good hand. I don't want to go all in. I don't want to show my whole hand. Same thing in the market, right? I don't want to go out there and saying, wow, I want to put in a bid for 10,000 shares right here on the bid, and I'm going to show all 10,000 shares. Why? I'm not going to get hit with stock. So I need to once again anticipate, how am I going to be able to build my biggest position? How am I going to be able to put the most stock on? How am I going to be able to get out there quietly where people don't see my monster hand coming? Do you guys understand what I'm trying to say? So I'm anticipating already the scenario from every single step of the poker hand, from every single step of the trade. Now what happens if? Write that line down, guys. Write it next to you on a piece of paper. What happens if? I want to know what happens if. What happens if the next guy goes high bid? What happens if the stock starts getting a tremendous amount of volume and it starts running up? What happens if a few of the bids drop out? What happens if it gets down to my critical stop level where I want to get punched out, I want to be out of the position? What happens? How many of you guys are saying that to yourself? Exactly. I see there's a lot of instinct, a lot of psychology behind it. But how many of you guys are doing that? How many of you guys are saying, what happens if? I want to know right now, how many of you guys are sitting with your hands on the keyboard? How many of you guys sitting with your hands on your keyboard? Are you guys kicking back in the chair like I'm kicking back? Feet up on the desk. Keyboard. Who else? Jason, you're a student. That's a student of ours. That's why you know to have your hands on the keyboard. Yeah, most of you guys who have taken the class, you know you have the hands on the keyboard. Brooks, you're doing this forever. I want to know from you and from everybody else, why is it? Why is it that we keep our hands on the keyboard? Hands on the keys. Why do we keep our hands on the keyboard? Watching and waiting. What happens? Westside, let me ask you a question. What happens? Ready position, exactly. Westside, what happens if a guy comes high? You're holding 500 shares of stock. You're up 10 cents on the trade. You're like, I'm not selling this thing. I think it could go higher. Next thing you know, a guy comes high bid, not 2 cents higher, 40 cents higher on the bid, and the stock opens up really wide. They take the whole offer, and the guy opens up 40, 50 cents higher on the bid. Are you ready to do that trade? And it's a literal question. When we give our class here also, what we do in the class is we do a keystroke exam. We make people be able to perfect keystrokes according to what I train them to do. So I tell a guy, hey, go high bid, go low offer, take the offer, hit the bid, change your tier size, cancel your offers, put in a bid, put in a stop underneath the bid, put in an offer, put in a higher stop than above the offer, build 3 positions, put in your different spot, grow, and so on. How many of you guys are ready to do that? How many of you guys are skilled enough to do that? So that's item number 1, right? You're getting in front of this poker game by anticipating what's going to happen next. So I'm hoping that a guy goes high bid. Okay. Second, do you have your hands on the keyboard ready to pounce on the stock, ready to jump all over that stock and either take the offer because you want to buy more, hit the bid because it finally got to your price, be stopped out at the right price, get ready to get out of the position, get ready to build a position? Are you guys ready to do that? Have you done that? Got a few strokes down on the keys much quicker now. Westside, there's no reason not to have all these keys at your disposal. That's what they're here for. Technology has been built to advance what we do, to advance our business, advance our career, get in and out, and be as flexible and as quick on the keys as possible. Good, don't lose. But you know, it's great to see a lot of our fruits of the labor come to fruition, and you know, to see guys much quicker and much better. You know, just work on it every day. I always say when guys also step off the live trading screen, get onto a demo, get onto a simulator, go high bid, go low offer, take the bid, take the offer, learn what positions would be like if you're really in them. And once again, I mean really in them. You know, you can imagine the amount of guys I've seen in my life that say, oh man, I killed it on demo and I'm ready to go. It's a different game. Demo and live, just 2 different things. Anyway, back to Traders Poker, just to wrap up as, you know, quick segment, and next time we'll talk about potentially different comparisons to, you know, even blackjack and roulette. But for just the poker, let's just close our eyes for a minute. Remember, we always do the close your eyes so you could picture it, all right? Close your eyes for a minute. Remember that poker table. Think about a poker table. Think about other people on the table. How are you going to react to what they do in the proper way? You're waiting for them. Somebody raises you. You call them. The next time around, you check. It goes around the table, comes back to you. Now you check raise. How is the guy going to feel? How is he going to react to it? How are you going to react to his reaction to it? When a guy gives a small bet, do you go all in? If he calls you right away, you have to do the same thing in the stock market. There's no doubt that you have to do the same thing in the stock market. What happens if? And you have to remember that phrase. What happens if a guy goes high bid, guy goes low offer, news comes out on the stock, the market starts moving out, there's something that happens extraordinary in the environment, something happens on a Boeing plane, like we just saw, a lot of airplane drama just now, and Boeing down for the day. What happens, guys? How are you going to handle yourself? What's it going to look like for you? Okay, I know that I do the same thing. I want to know if this stock does this, then I'm going to do this. For example, you have RIM. RIM goes down to cheap enough level. Groupon, right? Groupon gets down to that level. Everybody downgraded that one day. What did I talk about, guys? I got on the microphone. I talked about when this thing gets downgraded. When this thing gets downgraded, at the bottom, what is that called? It's called the bottom. Was it the bottom of Groupon? Of course it was. Well, I don't know what that was, probably $2.50 ago. But certain things you anticipate, and you wait for bad earnings to come out. You wait for certain things to develop where a certain trade happens. When that happens, when a scenario happens, are you ready to take advantage of it? Are you ready? Are you fast enough on the keys? And are you anticipating that can happen? The time is over for you guys to be like, oh, just next time that happens, I'll take advantage of it. The time's now. Okay, when you say to yourself, if X, Y, and Z happens to this stock, if this stock gets above this, if this stock pulls into this level, when that happens, when you're ready to go, and that materializes, are you ready to knock the cover off the ball? And that's where I'm going to leave it on Traders Poker. It's a longer conversation. I'd like to continue following up on it. Exactly, Demos Fantasyland. Good, I see guys getting better with their keystrokes. Okay, excellent. I'd like to jump out of here for a second. I just wanted to address one of the questions that came in. You guys probably can't see this. Okay, guys, so here's the question that came in yesterday. I've been trading single options contracts, but have continually had a misunderstanding of where their price action, with their price action. When the options are in the money, I'm not seeing them match the price increase dollar for dollar with the stock. I've seen this several times. Here's an example. This is from yesterday. MCP, $11 calls with January expiration on the 19th. Entry, the stock was at $10.90. 42-cent premium for the $11 calls. The end of the day, the stock goes up. How much is that? About I don't know, 70 cents. And the option price is only now 72 cents from 42 cents. So it went up 70, and it went up. The option only went up 30. The stock is 50 cents in the money, but the option is only raised to 30 cents. It's a very good question. And these are the type of questions you guys should be sending in on a daily basis. Send them to info@shinesroom.com. This is how you get better. This is how you do more. This is how you interact with the crowd. This is how you get your questions answered. As I always say, who the hell else wants to hear your questions besides us? So feel free to send these type of questions in. Don't be out there, in the dark. Utilize and use our relationship and our community to your advantage. So here's my explanation on something like an MCP, yesterday's call. If you think about it, for this question, if you think about what happened, right? You paid 42 cents for an $11 call that was out of the money. So if it was out of that money, what is that 42 cents? It's all premium. Okay? There's no intrinsic value. Remember that phrase, intrinsic value? And this came in from a student who took our course that also covers options. There is no intrinsic value in there. There is no in-the-money value on this option. So you basically paid 42 cents of premium. So what happens is now, when you see the stock is much higher, some of the premium or some of that premium extra came out and it got replaced by the intrinsic value. So the stock was now 58 cents in the money, and there was only a 14-cent extra premium on top of that 58-cent in the money value, or in the money intrinsic value on the name. So what happens is one got replaced by the other. Okay, you still may say to yourself, hey, is this a good buy? Is this a good sell? Is this something that I want to buy or sell at this point? Maybe you say to yourself, wow, this has a great value to it. I'd look at it that way, right? I'd say to myself, wow, this has a great value to it. What's the value? The value is that it's only 14 cents worth of premium from a stock that has volatility. I'm just going to type in a quick chart on it. So, you know, here's my screen. Just going back to... Right, this is today. On the left-hand side, I'm going to go 3 days on this side, on the right-hand side. Okay, so we're looking at the 3-day on the right-hand side. If you guys could see that, it's not that clear. I'm sorry, guys. You know, I use a big monitor. It probably doesn't come across that well. And on the left-hand side, this is today. So, in a way, take a look at this and tell me if it answered sort of your question. Guys, what happened to this name? It pulled in. This stock pulled in, right? So if you look at the MCP, pulled in, it opened around, you know, 1160 or so, where you talked about it yesterday, even gapped up a little bit just to pull all the way in. 1181. Interesting. 1181. So there was a 14-cent premium yesterday that you recognized above the price of the stock, brings you to about, I don't know, 1172, and this stock traded right around there and pulled in. So you tell me, guys, what has that done for us? Did it maybe show that there was a hint that the stock potentially wasn't going much higher because a lot of the premium came out? And maybe it just entered back towards the top part of some area of some resistance of something that it's done before, and the hardest part of the move was over? That's what it looks like to me. That's what would give me a hint on it, is that, wow, there's not that much premium. Remember, the options market is fair. The options market allows for you to buy or sell something. So you could either buy something that has not a lot of premium, you could sell something that does have a lot of premium, because there's less demand on the premium in that point, right? There's not, remember, volatility is something that gives us more premium to add on, and maybe the volatility came out and the stock sold off, and the premium and the stock and the option was just not as expensive and not as popular. So what happens is, once again, the market's run by buyers and sellers. There are probably more sellers of that call available around there than there were buyers of the call at that price, and that's what took some of the premium out there. So I hope that explained that a little bit. I just want to take one or two questions, and I'm going to jump off the call. Have to be careful with that premium with earnings. On an earnings announcement, the advance premium can evaporate overnight. You could lose even the underlying stock goes in, even if the underlying stock goes in your favor. Exactly. Premium comes out very quickly, and you know, Peter, for you, remember that's the volatility, right? That's the vol that's in there. What happens is people expect a lot more volatility going to an earnings time period, an earnings announcement. And when there's a lot of volatility, there's more premium. The stock could stay at the same price, and you could lose a ton because just the premium comes out of the name. Because there is less demand on the premium. Exactly. This morning you sold the FFIV 9250 Jan puts. I entered when the price was at the bottom of lower ascending trend. In just over 3 hours, able to pull 62 cents out of the trade. I've been watching it from a barefoot trading session. Leo, I love everything that you're talking about. You're giving some great insight. You don't even realize how much insight that you're giving in that one statement. First, you're following the stock very closely. Second, you use the technical analysis that you've also, you know, gathered. You've learned to be able to sell premium, bring that in, understanding what that means, and understanding it's bringing in that type of premium and what the risks and what the rewards are of the name. And also you were able to lock in premium and lock in profit. And I'm sure the amount of return on investment in such a short time is unheard of out there. And, you know, at some point we'll get big enough to be able to do these trades in size and bring in that 62 cents on 50 or 100 or 200 or 500 contracts, and it's just an amazing insight into that. Adam, thank you. Peter, thank you. Lou, thank you, guys. We're going to head back to the live trading broadcast. Thank you for joining us today in Shine's Trading Room, educational piece, midday, and I'm helping out because Melnick is still having tech issues. So once again, thank you for your time. We'll see you guys back in the live trading broadcast, and make some money. Enjoy the rest of the day trading, and continue to grow as traders every day.